Despite a weak close on Friday last week, US markets logged a second straight week of gains. The S&P 500 rose over 3.5%, the Dow gained 3% and the NASDAQ climbed more than 4%. All three indices remained marginally in the red for the year but are now within 1% of turning positive. Focus now shifts to the Strait of Hormuz and the start of the first quarter earnings led by major banks including JP Morgan, Bank of America, Wells Fargo and Goldman Sachs. Netflix will also report while the economic data calendar remains relatively light. The latest macro signals present a mixed picture. US inflation saw the sharpest monthly increase since June 2022. At the same time, consumer sentiment dropped to a record low just before the ceasefire announcement. Analysts suggest both indicators may reflect a lagged impact of recent volatility, with markets now watching how geopolitical tensions play in the Strait of Hormuz.
The oil that's stuck on container ships in the Strait of Hormuz, it's not coming out, or at least it's not coming out rapidly now that things are potentially starting to move. And that's a situation that at the moment is a bit open-ended. We don't know how long it will last. We don't know what the sustainable damage is going to be to infrastructure that is producing and refining oil and other energy sources around the Strait of Hormuz in the Middle East. And so that creates a bit of an overhang and uncertainty for oil producers, oil consumers, businesses in general, and that leads to higher prices.
Oil remains the key variable for markets. US crude has been extremely volatile, jumping from around $68 before the conflict to above $100 per barrel on Monday after failed Iran-US talks, though futures suggest prices could ease towards $85 in the coming months. Trump's willingness to open the Strait of Hormuz could make or break the market predictions. The disruptions so far have already seeped in the very fabric of global supply chains, making raw materials costly across the board. Meanwhile, semiconductor stocks continue to outperform, with chip-focused ETFs gaining over 20% year to date.